everyone. Today I wanted to talk about a proposal that is taking place by the current administration on something called the unrealized tax gain, which seeks to levy a tax on the unrealized gain for the ultra rich. And we know that if you have a piece of property or a stock or crypto and you sell it, you're only taxed on the gain. So there's no tax unless there is an actual gain, unless you actually realize the gain by selling it. This new proposal seeks to tax the unrealized gain, and I will go and I will explain it a little bit better in a minute. But in addition to this proposal, there is also the proposal of, and this applies for those who have real estate investment properties, to eliminate the 1031 exchange rules, which if you are familiar with 1031 exchanges, basically they help the real estate investor defer taxes by selling their property, and if they have a gain, they can use that gain to purchase the next property and deferring those capital gain taxes. So in other words, not having to pay it by deferring it. So I will dive into that as well. Before we move forward, please subscribe to my channel and share it with your friends. So let's take a look at this first article, and I want to first talk about the proposal to tax unrealized capital gains. So should we be worried about these now? Is this going to be applying to only the ultra rich? And because if that's the case, we shouldn't be losing sleep over it. But as it turns out, that might be just the beginning. So the proposal called the billionaire's tax will tax unrealized capital gains of wealthy Americans. And under current law, any appreciation of an asset, such as stocks, cryptocurrencies, or real estate, isn't taxed until the asset is sold. But this new proposal, which is in the general explanations of the administration fiscal year 2025 revenue proposals, will change that. So it will tax unrealized capital gains on assets that are sitting in the account but haven't been sold yet. So will this tax become law? We have to find out whether this will become law, but we can start learning about it now. The current makeup of Congress is a long shot that this current tax proposal will ever be voted into law. But if it does, it will definitely be a slippery slope. Why? Because the billionaire's wealth tax is like a trial run that applies only to the centimillionaires for the purpose of getting started, but it could eventually apply more widely. So there's the argument also that this new law will be unconstitutional because the 16th Amendment only gives Congress the power to tax incomes. So no unrealized gains. But aside from that, there is the other proposal, which is to eliminate the 1031 exchange. And so let's take a look here. The President Biden's proposed budget and Vice President wish to list of tax increases are both targeting the elimination of the 1031 exchange, a long-standing provision in the U.S. tax code that allows real estate investors to defer capital gains taxes on property sales if the proceeds are reinvested in a similar property. This proposal is part of a broader effort by the current administration to increase tax revenue, particularly from wealthier individuals and corporations. However, the potential elimination of the 1031 exchange has sparked significant concern within the real estate industry due to the far-reaching economic consequences it could bring. So the 1031 exchange has been a vital tool for real estate investors since 1921. It enables investors to defer capital gain taxes when they sell a property, provided that the proceeds are reinvested onto a new like-kind property within a specified time frame. So there is rules as to how to do these, and you definitely want to use a 1031 exchange company, because that's the only way you can make this work. This mechanism allows investors to leverage their investments and grow their portfolios without immediate capital gain tax burden, fostering economic activity and encouraging continuous reinvestments. So if you own a rental, say, and you have paid for that rental $200,000, and now your rental is worth $300,000, and you sell it and you get $300,000 for it. If you don't reinvest that property, you have your gain will be subject to capital gains. But if you want to reinvest all of that or your gain, the 100,000, then you can do that and not have to pay the taxes at the moment. So you are able to defer your taxes on that. So these are some of the consequences if that gets implemented: reduce investment in real estate because people will have to pay a lot of taxes on the gains. They will be less inclined to sell and reinvest in new properties. There is the transactional activity will lead to a slowdown in real estate development, particularly in commercial and multifamily sectors where 1031 exchanges are most commonly used. There will be a decrease in property values because a decline in investment activity could also put downward pressure on property values, as fewer investors are willing to sell and purchase properties. And so the real estate market could experience a decrease in liquidity, making it more challenging to find buyers and sellers. And so that could lead to a stagnation or decline in property values. There will be increased costs for small and medium-sized investors. While large-scale investors often have access to various tax planning strategies, small and medium-sized investors might be affected by the elimination of the 1031 exchange. These investors can often rely on 1031 exchange to build their portfolios and grow their businesses. And it's particularly this 1031 exchange strategy is particularly helpful to first-time investors as they build out their investment portfolio. The next negative impact is on local economies. And on a study, 2015 study by Ernst & Young examined the idea of repealing Section 1031 entirely and determined that the cost to the American economy would be over $13 billion. A subsequent study by two professors concluded that the cost will be closer to $20 billion and will effectively create a lock-in effect, resulting in fewer transactions. We already have definitely, we don't have enough inventory all across the board in the United States. So these will definitely even result in even fewer inventory and fewer transactions as a result. Ultimately, industry-wide prices decline. Real estate transactions generate significant economic activity at the local level, including construction jobs, property management services, increased spending in the surrounding community. A decrease in transactional activity could harm local economies. So basically, that's in a nutshell what some of the details of this proposal this revenue proposal is quite lengthy. I encourage you to take a look at it online, the revenue proposal for the Biden administration for 2025, and try to read through it. There might be more aspects there that we're not covering. There's a lot more aspects there we're not covering here, but in regards to housing, these are the two main ones. So I thank you for watching my video today. I ask you to please subscribe and share with your friends. Thank you.